Hi everyone, Marco here. So NIO has just dropped some news and the stock price is supposed to go insane. Let's dive straight into it. And the first bit of news that we're gonna look at is the deliveries. The deliveries are only 5,000 in basically what happened in April. April, if you look back, what we had in April last year was actually higher than April this year. So straight off the bat, we see that the deliveries are lower than last year and lower than last month. And what I wanted to talk to you about in this video is the simple fact that this is not a bit of news that it will change everything. We need to look at the big picture, and this is what this video is about. The stock will go insane. So first, the deliveries. Is it bad news really or not? Well, it definitely is bad news, but in the grand scheme of things, it looks like it's probably in the cards and not as bad as you may think. So first of all, there are several things you need to take into account. If we go and look at their balance sheet from the previous earnings, which is this one, we see that the earnings that they posted were actually more or less in line, and it's down here, sorry guys, it's more or less in line with the previous quarter, and we're talking about 2021. So this is probably a much worse bit of news. And if you look at it, you also realize that the amount of revenues has kind of gone a little bit, let's say a little bit in terms of revenues, has basically hit some kind of roof, some kind of ceiling, and that is of course a big challenge for a company that is a growth company, where the valuation is mostly due to the growth of the revenues. And so this is the kind of first bit of news that we need to discuss mostly. The fact that potentially even the future revenues will be lower. And so for a stock like NIO, this is definitely bad news. And in fact, today, the stock price is not actually going up or down. It's kind of like fluctuating, not doing much. Probably the reason is because the stock has gone down so much from all-time high. It's one of the stocks that has been beaten up the most. And so this is basically what we are looking at now, but there is also a good bit of news. Yes, not only bad news on this channel, we also release good news on NIO because we love good news. And the good news is this, that on April the 29th, the first batch of tooling, yada, 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 but basically they are talking about the ET5. And that's a new model that was basically released that was launched, let's say, last year. But, and this is the news, guys, the company expects to start delivery of the ET5 in September 2022. Now, what that really means for NIO is that finally we have a new model coming out, and that's something that can really change things. I just wanted to show you what the ET5 looks like, and that would be an incredible addition to the roster, to the models that NIO has got. And finally we have a sedan, and that's what really will change everything. So that's what it looks like, and I've been talking about this quite a lot on this channel. Now, it's basically a new type of sedan that will basically take the market by storm, and that will potentially give the boost that NIO misses at the moment, and it's kind of struggling to grow a bit. Now, as I told at the beginning, you cannot just look at NIO as one company, but if you're, of course, like myself, interested in the stock price, well, you also have to look at the entire stock market, the economy, because of course the economy is important, and now we're going to look at the economy for China. Now, you know that China is a country that is growing, and it's kind of the engine of the planet at the moment. Is one of the countries that is growing the most. So what I'm giving you here is actually bad news. Investment banks / expectations for China's economic outlook. One sees GDP growth of less than 4%. Now, for us, and I live in a country where, well, I'm just going to tell you in a second, but the growth is not really like the biggest and most important thing. But looking at China, this is actually much worse news than looking at NEO, because NEO, of course, is like following the trend, and the country is setting the trend. The whole country, the whole country, basically all the people living in China. You see that the growth, it's actually slowing down. And when the growth is slowing down, we might even enter, of course, hopefully not, but we might enter in a recession for China. And what that implies is that costs are cut. And one of the costs that could be cut is, of course, the cost for basically for expensive purchases, like buying a new car, buying an expensive car like NEO. It's a luxury brand that only few people can buy, and it's more expensive than, for example, buying another type of car, maybe a hybrid model, and with the same amount of money you can buy a car that is complying with the Chinese legislations and be much cheaper. So that's the first thing. You see the first thing. Now, as I told you, I live in the UK, and the UK, the US, the entire Europe, apart from Germany, most of the countries have just posted a negative quarter in terms of growth. They actually entered the first half, let's say the first step for a potential recession. Now, in this channel, I've taught you that for a recession, you need 2 quarters of negative GDP. So we just had the first one, and we see that this could potentially last longer. And to be honest, my expectations as an investor, as a human being, even before, as a employee as well, because I'm a normal person like you, I do have a job, I'm expecting this recession to last. It's not going to be just 1 quarter. Maybe next quarter is going to be positive, maybe. However, I'm sure that if it's not next quarter, or the quarter we are basically living in now, if it's not going to be this quarter, it might be next quarter, and then we're going to enter a full-blown recession by the end of 2022. Now, how long is going to last? Well, let's have a look at what other people, and by the way, this is very important. The recession could mean that growth stocks like NEO would be absolutely battered. And so that's why we are going to keep an eye on that. So based on the Fed, it looks like that the Fed and the Bank of England will both increase rates. And this is an absolute game changer, because when they do that, it also means that we'll have basically a potential trauma for the market and for stocks like NEO. Now, if you scroll down, we see what investors are expecting. So investors are betting that interest rates, which are currently between basically 0.25 and 0.5%, will be lifted to 2.7% by the end of the year. Now, this is incredibly bad, at least for a very short term. I'm expecting this recession and also beaten up like tragedy going on for growth stocks like NEO to last up until the end of 2023. I'm not expecting any more rate growth in 2023, especially for the US, hopefully, and for the UK. But in 2023, we're going to see Europe starting to increase their interest rates, which is very bad. And so overall, I'm expecting this kind of trauma, this kind of potential recession to be a year and a half, maybe even 2 years from now. And if you want to stay up to date with all the news on NEO, subscribe, and I'll see you on my next video. See ya!